Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, August 30th, 2010. Let's start with the big news from the day, which was the sharp move in most of our yen pairs. The dollar-yen pair declined after measures from the Bank of Japan lacked sufficient punch to halt the yen's advance. The dollar surrendered gains made in anticipation of the emergency Bank of Japan meeting, which we see here as we rose to the 85.90 level. Investors had sold off the yen due to expectations that stronger measures would be taken than what was announced, an extension of the Bank of Japan's loan program. The BOJ Policy Board agreed to loosen monetary policy by adding another 10 trillion yen in 6-month bonds into the market at an ultra-low rate of 0.1%, expanding on its current program of 3-month loans. But even as the Bank of Japan measures were announced, they were met skeptically, with the market taking the view that steps were no more than what had been expected all along and therefore was already priced into the yen's current value. As a result, we saw the yen gaining rather sharply, pairing most of its gains that we had seen even in Friday's session, as we tested the 84.55 level in New York trading and towards the end of today's global session. We can see that we test an upward sloping level of support, and we've broken through our 200 period, our 100 period, and our 50 period moving averages. The unknown piece in the puzzle now is whether a frustrated Japan will turn to the next step of open intervention in the market by selling yen and buying dollars. However, such moves shouldn't come until we break below our recent 15-year low around the 83.60 level, but maybe not even until we reach our all-time low around the 80 level. While the greenback also retreated against the Swiss franc, it did gain against other widely traded currencies as investors abandoned last week's move into riskier assets and shifted more into traditional safe harbors such as the US dollar. The North American session showed a marked decline in risk sentiment, and US stocks slid to start the week. We thought as much on Friday, as the words from Bernanke did help to spur some gains in equities, but overall the situation remains downcast in the US, and at the end of this week we're going to get August's job data from the US with expectations of a poor reading with just 20,000 private sector jobs created. Overall, the expectations are for the economy to have shed around 110,000 jobs if we include temporary census workers. So as we can see, we broke our four periods rally from last week, 4-session rally, and broke below all of our moving averages and now test the 1.2650 level in late New York trading. That pairs about 61.8% of this 4-session rally we had seen in last week. So we'll see if we're able to break that support heading into tomorrow's trading. Currencies sensitive to risk sentiment and US and global growth outlook slid in today's trading. Here we're looking at the US dollar Canadian dollar, which moved in favor of the Canadian dollar in Friday's session and to open the Sunday trading, but we found support at our 200 period moving average, also the 1.0470 level. And as we entered the New York trading session, we see the pickup in favor of the greenback as we had US stocks sliding and risk aversion becoming the dominant theme in today's trading. We paired most of the move we had seen in Friday's session, coming to test the 1.06 level at around 4 p.m. Eastern. The next level to the upside, very important level of resistance, will be the 1.0660 level, which we tested twice last week but were unable to move above. Now, oil prices were down about 1%, and the three main U.S. indexes were off between 1% and 1.2%, leading the risk aversion. Taking a look at another one of the commodity currency pairs most closely tied to risk sentiment and global growth, the Australian dollar US dollar, and here too we see Friday we had a very sharp move in favor of the Australian dollar, but we met resistance 0.9020, and we've shed a good amount of our gains from Friday, more than 50% if we measure the Fibonacci from our low on Friday to our high in today's trading. So our next level of support will be this 200 period moving average, which we had pretty much no problem breaking above in Friday's trading. So we'll see if we similarly break below it heading into the Asian session. We also have this upward sloping level of support similar to our moving averages, so we'll see if that holds any support for the pair. On the downside, we do have very important levels, 0.8850, which had acted both as support and resistance throughout the past few months, but as we can see, we did break below it during last week's trading. So we'll see if it too is as important as it was before, or if now the new level of support is closer now to 0.8775. We have been looking at some of our dollar crosses, but if we take a look back at some of our yen crosses, starting with the Australian dollar Japanese yen, we see very sharp moves in favor of the yen following the very strong moves against the yen on Friday in anticipation of some news from the Bank of Japan, but that obviously has disappointed market participants, and instead we've seen the yen gaining sharply in today's session. The question is now, will we go back to test the lows we had set in last week's trading? In this pair, that would be around the 73.50 level. That would happen if we continue to see a sell-off in stocks, especially if we now move to the Asian session and see declines following the slide in US trading. Our old levels of support here around the 75.80 level did not hold very strongly in today's trading. We did stop there for a while, as that also corresponded with our 50 period and 200 period moving averages in the 1 hour time frame, but we could see we're now extending our decline in late New York trading. Taking a look at the pound yen, the UK was celebrating its summer bank holiday, so trading and liquidity was light in the session, but still, as we saw in our other pairs, the pound suffered from a general sense of risk aversion, and the gains in this pair moved in favor of the yen. We paired all of our move from Friday, and we actually set a new low for the last 3 sessions in this pair. Here too, our next level of support will be our lows from last week at around 128.70, and we'll see if, unless we get some other news from the Bank of Japan, specifically in terms of some kind of intervention, if we continue to see the yen strengthening, if the mood of risk aversion continues into Tuesday's session. Taking a look at a final currency pair, here we're looking at the euro versus the Swiss franc, and we could see that the Swiss franc gained sharply in today's trading. Also, this Swiss franc is a safe haven currency, just like the Japanese yen and the US dollar. And we can see here we reached the 1.2980 level, about 10 pips shy of our August 25th low of 1.2970, which is an all-time low for this pair. So we'll see if we are able to manage to break that level, or if we bounce up off that as support. It'll be interesting to see if the Swiss National Bank continues to let its currency appreciate, as that does hurt its exports, and while it abandoned intervention several months ago, if it will begin to talk up prospects of intervention again if we continue to slide in this pair. So that was a look at today's market highlights. Let's take a look at the upcoming fundamental docket. Tonight, Japan posts a measure of industrial production, preliminary version, as well as retail sales, while at 9:30 p.m. Australia posts its retail sales as well as a measure of private sector credit. Overnight, we get unemployment data from the Eurozone and Germany, as well as the preliminary version of consumer prices. Tomorrow in North America, we start with the monthly GDP data from Canada, and that is followed by U.S. S&P Case-Shiller house prices, the Chicago PMI, the Conference Board Consumer Confidence Index, as well as at 2 p.m. the FOMC meeting minutes. As we can see, the U.S. data is expected to decline, though consumer confidence might nudge up a little bit. That will do it for today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.